Okay, so please have a look. Right, now what are we supposed to do, guys? So we have been given the actual balances as of 30th June 21, and then we have to do the budgeted balance sheet as of 30th June 22. Right, that means after a year. Right, then what do you do, guys, when you get this question? Right, you glance through the question. Right, then I can see some balances, right, assets, liabilities, etc. I can see additional information. I'm not interested any of them. So what do I do? Go to the additional information. Yes. So what is it? Calculate the budgeted receipts from accounts receivable and calculate the budgeted purchase of inventory excluding GST for the year ending 30th June. Right. Then we have reference to one characteristic. Don't worry about the theory right now. Prepare the extract of budgeted cash flow statement for operating activities, budgeted bad debts expense, and then the rest is theory. Okay, how many marks altogether? 25. That's quite a lot. Okay, so then see, that's how important budgeting is. Yeah, right. Okay, now see this one, 5 and 4 marks altogether 9. Easily you can get them. Yes. All right, we'll do it. Right, so then we'll do accounts receivable, guys. Firstly, I mean, I would do all of them together, but we'll do accounts receivable. What do you do? Opening balance is 11,200 and closing is 12,000. So then you can put the first day. What's the first day of the period? Yes. Yes. What's the first day? July. Yes. First 21. Yes. Right. Balance. How much? 11,200. And then closing is how much? 12,000. Yes. Closing is 12,000. Right. So what is the date, guys, for the closing balance? But date, hold on, don't worry about the date right now, because we'll have other information. So we'll write just one date, so then all of them are relating to that date. Right, that is done. Then we'll read the if you want, we can do inventory as well. Shall we do inventory also together? You should be fine. Yes, 14,500 is opening, closing is 20. 14,500 opening, and 20 is the closing. So the date again, July 1st, 21. This one is June 30th. Sorry, don't worry about the date. I will put it a little later. This one is balance. This is balance. Right. Then if you want, I would do this one, that box for the total. Right. Then you won't write anything after the closing balance. Right. Okay. Then we'll go to the information. Sales 280,000 plus GST. Credit sales is 60%. Right. So then what's the double entry for 60%? Well, tell me, 60% what's the double entry? You know? Accounts receivable is debit, saying sales slash GST. Is that correct, Setu? Do you debit the accounts receivable? Yep, sales as GST clearing as. Right. The date is June 30th. You don't have to worry about the day, the year. Why? Because they have put 22 here. So that means I'm not really worried about the year here. I just put the 21 because it's a different one, but the other one, June 30th, says as GST. How much though? 60% of 280,000 is how much? 168. Yeah, 168, yes. Then you have to add GST for that, 16,800, which is becoming 184,800, correct. 184,800. Yep. Okay. Is it okay? Right. Then also we have, what is it? 2% of, as I remember, 2%. Sales return is 2% of credit sales. Does it have GST? Yes. Sales return, does it have GST? Yes. Even though it doesn't say here, see, it doesn't say. See, this one they say plus GST, but this one doesn't say. It doesn't say. That means basically we are having GST. Yes. Anyway, we have GST, guys, for that one. Right? Okay. Because when we sell, we apply GST, why not when they return it? Anyway, regardless, they are saying it or not, regardless, you have GST, right, for all the relevant items. Well, what are the transactions that we don't have GST? Wages, we don't have GST. Inventory loss, write down, gain, we don't have GST. Interest doesn't have GST. Drawings, no GST, right? So those are the things that we don't have. Capital contributions doesn't have GST. Those are the things that we don't have GST. Yes, for all the others, we have GST. Yes, right. Okay. Then sales return is how much? 2% of 184,800. Right. What's the double entry for that? The date I put here, June 30th, 22. Right. 22 I'm not writing because they have given it at the beginning. Right. What is this cost reference, Situm? Sales returns / GST clearing. Yep. GST clearing. Okay. So the amount is going to be 2%, which is 3796. Yep. Yes. Nothing, you didn't do it? I saw that you had written. 3696. Okay. 3696. Yep. Not 37. Okay. Next one. Next one, they are saying all returns are sent back to the supplier for a full refund. So whatever the things that has been returned, we are sending it to the full refund. This is really interesting. Gross profit margin is 50%. Yes, they haven't given us the markup. And what shall we do? Gross profit margin is 50%. Right? Then can we calculate the cost of sales? Yeah, you know the gross profit margin formula, yes? Yep, gross profit margin formula. What is the gross profit margin formula, guys? GPM is, what is it? Gross profit over net sales, very good, times by 100, very good. How do you calculate the gross profit? Gross profit is, what is it? Net sales, yeah, take away cost of sales, so cost of goods sold, yes? right? That is how we calculate the gross profit, right? Now they have given us the gross profit margin. Then what do you do to calculate the gross profit? I mean, if it is 50%, then how would you calculate the gross profit, right? Gross profit will be, tell me, gross profit is going to be sales, yes, times by, what is it, GPMS. What is sales? 280. If you want, we can calculate the sales return for the net sales as well, but let's calculate in this way, right? 50%. So gross profit will be how much? 140,000. Then can we calculate the markup, guys? Yes, then what's the markup, Sitam? 140,000 is the gross profit. How much do you think the cost of goods sold is? Cost of sales or cost of goods sold, right? Times by 100 is the markup percentage. Percentage markup. Yes? Yep. So if we know the cost of profit, we know net sales, how much? I mean, let's say sales, right? Sales is how much? 280k. Cost of goods sold, we don't know, that's what we are finding, but we know the GP is 140. So how much is, sorry? Minus that one. How much is that? 140,000. So that means how much is the markup? 100%. Very good. 100%. Right? Markup is going to be 100%. Right. Okay, then what do? We have to deal with the at the same time we can do, guys, the cost of sales for the sales, right? Cost of sales for the sales. How much is the cost of sales for the total sales? Tell me. How much is the cost of sales for the total sales then? $140,000. Yes, Setum. Cost of sales for the total sales. $140,000. Yes. You divide by 2. Yes. Yep. Okay. Then what do we do here? We are going to, what's the double entry for 140? Credit the inventory and debit. What do you think, Setu? What happens to inventory? Yeah, so inventory, when we sold it, credit, yeah. So inventory decrease, good. Cost of sales, so 140,000 here. 140,000. Saying cost of sales. What's the date, guys? Date will be the last day, June 30th. Yeah. 140k. Yeah. Okay. Then don't forget there's another one. We need to calculate the cost of sales for, what is it? Sales return as well. What is the cost of sales for sales returns? Half of it, yes, very good. How much? 1848. What is the double entry for 1848? 1848. will be, yes, what's the double entry for 1848? So that means our accounts receivable return us. So what happens to our inventory? Debit, yes, 1848. 1848, what's the double entry? What's the double entry, guys? Yeah, we debit here, saying what? Accounts receivable. You sure? No. What is it? Yes, Setu, what do you think? Sales returns? No. You would do here saying accounts receivable is credited, saying sales returns. Then sales return is debited, yes? Then, right, cost of sales, yes? Because when we sold it, we recorded the cost of sales. Now it's the opposite. Cost of sales get credited, and this one is debited, inventory, because we are getting back the inventory. Okay? Sorry, I made a mistake. Not 1848. Why? Because this one is with GST. Sorry, that one we have to take away the GST. Sorry. This one, guys, 1848, then it will be divided by 11, yes? 1 74, then 6 80, yep, 1680. Right? Cost of sales 1680, yes? Right, done. Then also they are saying, what is it? 1680 is, see? Sorry, 1680, what is happening to 1680? All returns are sent back to the supplier for a full refund. Then what do? Again you are transferring to the, what? You are sending it to our accounts payable, yes? What do? Inventory will be what? Credited again. 1680 saying what? Accounts payable. Good. If we had done the accounts payable, we will debit it with GST. Okay? Now you don't have to worry about the date hereafter. Why? June 30th we have written it. Now you don't have to worry about the date. Accounts payable 1680. Then, right, done. Okay? Yeah. Then we'll go to the rest of the question. Right. We are gross profit. Inventory gain, there's inventory gain. How much is it? 1000. What's the double entry, guys? Debit inventory saying? Yes, Setu? What do you say? We debit the inventory saying? Inventory gain, yes? Right, inventory gain, 1000. Right? Then, cash purchase of inventory is 20%. They are saying cash purchase of inventory is 20%, but we don't know still the total purchase. They are saying cash purchase is 20%. Let's figure it out. Right? Then what else? The rest, payments to accounts payable is given. Quarterly loan, GST settlement, advertising. And you see, advertising includes 500 of inventory. What's the double entry for that?
Inventory
Credit saying? Advertising? Yes. Okay, next one. Bad debts written off 1650 including GST. What's the double entry? Accounts receivable credit. What do you debit? You agree with that, Satam? You credit the accounts receivable with the bad debt written off. Yeah, so correct. Why? Because accounts receivable decrease. Yeah. Always think what happened to the item. Increase, decrease. That's it. Yes, where do you debit? Bad debts. You debit bad debts? No. Allowance for doubtful debt. Okay? Not bad debts. Allowance for doubtful debt. So then we will credit the accounts receivable 1650, saying allowance for doubtful debts / GST clearing. Okay. Next one. Discount expense. Do we record it anywhere? Discount expense. What's the double entry for discount expense? Is it affecting our two ledger accounts? Is it affecting? No? Sure? Both of you are saying no? No. It is affecting, yes? Discount expense is going to which account? Inventory? Both of you are wrong. Where is it? Accounts receivable, yeah? Whom do we offer discount expense? Right? Accounts receivable, yes. If we got it, discount revenue from the accounts payable. Right. So accounts receivable, 2500. No. 2500, you credit saying discount expense. Right, 2500. Basically, I think that's it, because that's all we can. Yeah, that's it. We don't have anything else that we can record. All right, now we have to find the what can we find here, guys? Now firstly we'll start with the accounts receivable. That's the easiest one. Okay, what's our process here? What do we do? Add which side? So higher side, yes, correct. So which one do you think, Satam, the higher side is? Debit side, easily debit side, so we can add it. Okay, I'm going to add it. I put the totals in different colors: 0, 0, 0, 5, 6, 196, right? 196,000. Then the other one I'm going to find. What are we going to find here, guys? Yeah, bank. Yes. So receipts from accounts receivable. Yes, bank. So then let's calculate. 4, 10, 15, 5, 2, 12, 14, 19 plus 1, 22 remaining. 5, 8 plus 2 is 10, 10 plus 6, 16, 1 remaining, 7, 176, 154. Correct? Faster than your calculator? Okay. Alright, guys. Alright, then inventory. Shall we do inventory? Now what are we going to find? Inventory is a bit complicated. I won't say it is easy, it is a little bit complicated. I'll tell you why. What are we going to find here, guys? What would we find here? Purchase of inventory. How much we have purchased. Okay, however, which side do you think is higher? Credit side. Very good. Both of you are saying credit side, correct? So let's add that side. I'm getting 80. 11. 2. 6. 162. 180. So I'm repeating the same total. 162. 180. Okay, now there is an interesting thing here, okay? Right. Now, we are going to calculate the total purchases, okay? So I'll write here 0, 0, 6, 5, again 0, 1 remaining 7, 7 plus 5, 12, 2, 4, 145,000. Yeah, 145,000. Now what do we write in front of that one? Nothing. Okay, that's 145,000. You know what this one is? If I write something, don't write, however. If you want, you can write this one. But firstly, have a look. This is the total purchases of inventory. Yeah. Why? Because we have cost of sales and inventory gain, blah, blah, blah. But we haven't purchased any inventory. This is going to be the total purchase. But remember, there was a adjustment for that. Anybody remembers? There was a percentage relating to this one. Remember? No? 15%? 50% is what? Sorry, what is it? 20% is what? Yes. See, cash purchase is 20%. That means we found the total purchases, yes? From that 20% is cash. Meaning, what do we do, guys? 20% we are going to write, what is it? Yes? Bank. 20% of this one is going to be how much? 29,000, yes? 29,000. Yeah? Then the remainder is 80%. 80% of that one will be 32, 116,000. Yeah, 116, yes? 116, then what do we do? Same? What do we say? What do we say for that one? We'll say 116,000 will be, what is it? Accounts? What? Accounts? Payable? Yes, Sitam? Is it payable? Yeah, this is the credit purchases, correct? Accounts payable. That's the credit purchase. Had we done the inventory account, accounts payable account, we would have done with GST for that. Right. Then part C. With reference to one characteristic, explain why Simona should not include an inventory gain in her budgeting process. That's a good question. I think we might have done a question like that. I have slight memory. Okay, why do you think, guys, we shouldn't include the inventory? in her budgeting process. Inventory gain. Yes, inventory gain, referring to a characteristic. What is the characteristic that support us in budgeting? Can't remember. Which one? Relevance, yes. Right, then this one, referring to one characteristic, explain why she shouldn't include inventory gain. Probably inventory loss also same story, but rather inventory gain. We are kind of exaggerating our revenue. Inventory gain would have happened only when we, loss also, when we compare the actual quantity what we have with our inventory card, yes, right? So whichever that is going to give us, if it is actual value. So without actual value, it is really unrealistic to budget again, yes, right? Budget again, inventory gain is unrealistic, yes. So as a result, what do you think the characteristic would be? Yes, Chetan. So budgeting characteristic is what? Relevance. But for this one, not relevance. Faithful representation, yes? Okay, you read it? Okay guys, next one is operating activities. You want to try it? Okay guys, shall we do it? Now already we have found some answers for this one. What is it? Receipts from accounts receivable, that amount, and payment of cash to inventory. Yes, you can record them. We have, yep. However, if you want, we can start with the cash sales as well. Cash sales, how much? 40%. Yes, 40% means 112,000. Yep. So we can say, if you want, you can say inflows. You don't have to. Sorry, before that we have to say. No, this one is anyway operating activities. We don't have to write necessarily, but let's write operating activities. Operating activities. Right. Then we have inflows, which are cash sales. 112,000. Yep. Then GST received. How much? 11,200. Then you have receipts from accounts receivable. Accounts receivable, how much? 176,154. 176,154. Basically, that's all for the cash receipts. Then we have cash payments that are going to be starting from purchase or inventory purchased. Inventory purchased or purchases. How much? 29,000. Yes, as I remember, 29,000. Yeah, and also guys, we have to start another one. What is it? GST paid. GST paid. Remember the method I have taught you. You are starting with how much? 10% of that, 2,900. Like that, as we come across, we will add them. Then the other items we can record. What are those? Basically these ones. Inventory gain, nothing. Nope. Payments to accounts payable given. We don't have to calculate it. Payments to accounts payable. Payable is how much? 130,000. Do we identify GST for this one? No. Okay, we don't identify GST because why? By the time we purchase it on credit, we identified our GST. Quarterly loan prepayment, 500 interest. Do we record the 2,500? No. Right? Why? Because that is a financing. So we don't record because they're asking only operating. Okay. So interest is going to be 500. Then GST settlement, right? 4385. Okay. GST settlement 4385. Is this one and GST paid, they are the same thing? GST settlement and GST paid? No, they are different. Okay. Settlement is for the transactions that happened for the in the previous period. General expense, sorry, advertising. How much is advertising, guys? Paid in cash. 500. Advertising. 4,500. Then what is the GST for that? 450. Okay, like that we can do it. Right? Then shall we continue the rest next time? Okay, 8:21.